Good afternoon, everyone. Jason here. Today is August 16th, and this is your aftermarket update. All right, so if you watched yesterday's video, you know that we had a very choppy, difficult day. And while we did end the day up in the positive, it was a very choppy, difficult type trading day. In fact, one of the points of me putting out the video yesterday in the email to discuss it with you was to show you the power of holding on for big targets. We had a few losing trades. In fact, yesterday, I think we only won 22% of our trades yesterday, yet we still were able to come out in the positive. So let that sink in for just a minute. Only won 22% of the trades yesterday, but still able to come out ahead at the end. And the reason for that is because we hold on for big targets, right? We have an idea of where the target should be, and then we hold on for those bigger targets as we try to go through this process of getting again, the high risk rewards. So today was just the opposite of that. We had one small break even, slightly better than break even trade right before the inventory report. And then we had what turns out to be our OTG trade of the day. I'll let you watch that trade of the day video here in just a moment. But first thing I want to do is I just kind of want to walk you through the thought process for getting short after the inventory number. So one of the things that we talked about at the inventory number today, the crude oil inventory number, is the fact that the market doesn't always do what you would expect it to do. So, for example, the API report, which is the precursor to the inventory report, came out yesterday. There was a 9 million barrel drawdown in the crude stockpiles, and the market rallied from for about 40 ticks right when that number came out around 3:30 yesterday. Today, you had a very similar number on the stockpile reduction, a drawdown of about 9 million barrels, and the market did just the opposite of what you might expect with the bullish number. So let's talk a little bit about what we did and why we did it. So one of the things that we were talking about in here today is, and we talk about this in here every day, is the fact that we look for the market to kick the signal and pay the target. Those are our market maker levels, and I'm going to feather those in for you here in just a minute. One of the things that I want to draw your attention to here, though, is this red line. This red line that you see on your chart is where we ended up getting in today. Now, it's not here at this place where you see the first time touch. This large bar here was right at the release of the number. We came up into the 99 area, came back down, rallied back up into this 83, and then sold off again. So what we were looking for is let this thing kind of cool off just a little bit. So my thought process here today was we had a very bullish number, yet the market was responding in a negative kind of sell-off type of way. And we talked about this in the room today, that oftentimes happens when the expectation is not met in terms of what the real drawdown should be versus what actually occurred, or vice versa. And so we were just kind of letting the market get underneath us here. And then we did a couple of things that triggered me in short. So first thing I want to do is I want to turn on for you. I want to turn on the secondary levels here, and I want you to note where the previous session high is. It's right up here at 90. So obviously those are important ideas. Previous session highs, previous session lows, those end up being really good indicators of what you can expect in terms of support resistance. And so let's take a look up here. Let me make sure I bring this back to 83 here. This number should be at 83. Right there. Okay. So there's your previous session high at 90. We rallied up here a little bit. We came back down into our calculation for fair value, and then we did a little bit of rotation, and then the market comes right up into this previous session high. So that was an important indicator to me. We made a lower high up here. We then immediately fell back underneath our approach, then fell underneath our 83 level, one of my sweet spots of the retracement points that I look for. That's one of my favorite setups. We rallied up into that previous session high, found immediate resistance, and then I looked to get short down underneath. Now, the other idea that we had here, and by the way, before we go too much further, on that, we were looking to target this previous session low down here at 47.02. In fact, what we were talking about is bringing it up for an even 80 ticks at 03. But that was going to be our targeting area. That was one reason for a targeting area down there to previous session low. All right, so if you take a look here, we'll turn off these secondary levels, and that will turn on our market maker levels. We'll turn on the daily structure signal here. 90 also was one of our structure signal points here. So again, the way that we look at this market is that it's either going to come down to the structure target below or come up to the structure target above. And when we missed that structure target here by a few ticks right underneath the 48 even area, we came up into the daily structure signal. That was also previous session high. That was another clue and indicator to me that the short at 83, which is our favorite retracement point right there at that red line, that was an indication to me that we were in business. So what we were looking for initially was a target down here somewhere between this extension 1 at 22 and this area here at 40. We talked about our target being into these 30s here as kind of the halfway point between those two areas, and that was what we were going to be looking to target. Now, when you turn these off and you turn on these market structure levels, you're going to see that we also had a level down here at 40. So again, in our training program, we teach you how to use all of these levels and why they're important and what we look for as targets and those kinds of things. But then I'm not going to be able to give you all of that information here in this one small video today. But suffice it to say, there were a number of reasons why we were looking to get in short, and then the areas underneath that we were targeting. So we get in short here at 83, and then of course the market almost immediately sells off. Now when we get down here to this 16-17, you're going to see me get trail stopped out here at 28 for 55 ticks. So I'm in short here at 83, and I get trail stopped down here at 28. Now the reason that I went ahead and did that is right down there at 16. Once we came down into that area and what we were talking about in the group today, there was a line of liquidity. There was about 800 orders resting long down there at that 16-17 area. So when we came down, and you can see how the market on this 3-minute chart begins to slowly walk down, right? So the momentum, you had really heavy bars, bar, just always making new lows, right? Just continuing to move down, and then you'd get a bit of retracement. So it looked like it was starting to end, and then you had a ton of liquidity down here at this 16-17 area. And so I said, if it retraces back up to 28, then I'll be happy with 55 ticks times 2 contracts, which is 110 tick CL trade. So that was what we did as we were looking to continue on here. We were talking about that previous session low down here is 03 being our target. So the market kind of bounces around, and then it goes down to the low, and then comes back up here to 39.40, and then comes back and tests the low again. And again, no real conviction and energy into the low, and then it comes back. And so it's really, I'm really glad that we did get out where we did, despite the fact that the market comes all the way down into your market structure target down here to the tick. So we talk about kick the signal, pay the target. There's the structure signal, and there's another structure signal, and we ended up paying this target down here to the tick. That happens to be the low on the day. Was the low on the day down there to 79, and then the market does dig a little bit deeper here at 130 when you had the FOMC meeting minutes right in this area. And then of course we're sitting on top of the market structure signal now. But our short today was here at 83. One of the things that we talk about just consistently in here, and it is something that we will continue to talk about, it is our trading edge. It is holding on for big winners. Sometimes, like yesterday, that big winner that we held on to actually didn't actually pay the complete target until we were done for the day. But we did hold on to enough to get us out of the hole, despite the fact that I only won 22% of my trades yesterday. Today, I win 100% of my trades, and we had a 2-lot winner for over 110 ticks. So I'm going to let you watch that trade of the day. So as always, what I've done, this trade was about 45 minutes in length. I've taken the front part so you can see where I get in, and you can hear where my or see where the stops and targets are. By the way, it was a stop today of 11 ticks, and the target ended up being 55 ticks, so that was a 5-to-1 risk reward. And then I'm going to take the front end of that trade and the back end of that trade, and then speed it up, put a little music behind it so you can just get a sense for how the trade, it's a little faster than obviously it went, but you can see, for the most part, you can see how that trade we got in and how it progressed as we went through it. So I'm going to stop talking, and I'm going to let you watch this OTG trade of the day. Bring it down 1 tick. I'm in at 83 this time, actually, in at 83. And now it's probably going to race right on up. In at 83, short, target 90, sorry, target underneath you here is that 36. All right, so you see that we got trail stopped out there at 28. When I first started the trade, you heard me say my target was 36, but one of the things that we talked about during that trade that you didn't get to hear there that you heard in the live trading room today is that we were going to go ahead and push it down to that previous session low as the target down there at 03. We said that if the speed of the tape was moving very quickly, that was going to be something that we were going to do, and obviously you could see on that previous, right before we talked about getting into this trade, you could see that those heavy bars were coming straight down. So the speed of the tape was there. Ultimately, it did hit that level, but not before it came back. It took us out at 55 ticks times 2 lots. That's okay. That was one really nice trade today. And so we got paid for being patient. We got paid for cutting those losers short and letting the winners run. And so even though it was a little bit of a choppy day yesterday, we more than made up for it here today. Despite the fact that we did win yesterday, it was still a difficult trading day, but today it was about as easy as it gets in terms of moving to your target. So when it's like that, it's a lot of fun, and today was a lot of fun. So again, as always, I want to say thank you for watching the videos here at the Oil Trading Group, and until next time, I want to wish you good luck and good trading.